Working capital management. What is it and why it's important? In order to understand what working capital management is, we first must have a good understanding of what working capital is. Working capital is the amount of money a business has left after it's paid for all its bills, like electricity, rent, salaries, and any other expense that it has an obligation to pay for. This money that's left over is the amount the company has to use for growth, investment, and any other expense that might suddenly appear. So what then is working capital management? It's the mechanism or strategy by which a business directs and controls its budget in order to make the company as profitable, streamlined, and effective as possible. Another way of understanding working capital management is how best to manage the relationship between the company's working capital and the money the business needs to pay for the company's expenses. So, working capital management is quite simple and its importance easily understood. Or is it? In an ideal world, a business would have, let's say, a monthly profit of $1,000 and monthly expenses of $800. This calculation is the same every month and never changes, and so every month the business knows it has a working capital of $200, which it can now use for expansion or any other need that's not an expense for its daily operation. The company begins to see that there's a large demand for its product, and if it produced more, it could meet this demand and increase profits. However, to increase production, the company would need to buy more machinery, but the new machinery costs $400, and its working capital each month is $200. Simple. All the business has to do is save for 2 months, and it will have the $400 needed to buy the machinery, increasing production and raising profits. So, what's the problem? Once the company's bought the machinery, it will now need to purchase more supplies in order to purchase more of its product. The company's monthly expenses are already $800, and buying more supplies raises the monthly expenses to $900. This reduces its monthly working capital to $100. So, how long does the business now need to save in order to purchase the machinery? It now needs 4 months instead of 2 months, which is quite a long time for a company to exist without any working capital or money available for hidden or sudden expenses that always occur with any business that's in operation. One solution is to acquire a loan to purchase the machinery and use the working capital of $200 to buy the supplies. Since the supplies cost $100 each month, the business would be left with $100 of working capital. Good solution. Or is it? The loan costs money in the form of interest, and the actual amount of the loan needs to be paid back as well at some point. How will this affect the amount of working capital the business has each month? Well, it certainly will be less than $100, which may not be enough to establish an acceptable working capital amount for a company. Another solution is to use the working capital of $200 each month to pay for the machinery. Don't forget, the machinery costs $400, which would require saving for 2 months, and then ask the suppliers to defer payment for the supplies until profits have risen. While this is a standard and acceptable business practice, it's 2 months without any working capital available and requires a trusted relationship established over a long period of time with the supplier, which may not be possible. So, what then is the best formula for this company to follow in order to have sufficient working capital available, pay for machinery and suppliers in order to grow and make more money? The answer comes from how good a company is at working capital management and how important it is that they're very good at working capital management. Fortunately, a business owner does not need to be an expert himself, since there are many professionals and organizations out there that dedicate themselves to providing the best possible formulas and solutions to companies in order to expand their business in a healthy and successful way. To find out more about either working capital management, or those organizations that offer advice and mentoring on these subjects, please visit our website at www.finimpact.com.